Welcome back to Building a Market Narrative. This is episode 3. Episode 1, I kind of went through the weekly in a 4-hour, dealt with the one shot, one kill, or capturing the weekly range, how that's done, so to speak. Episode 2 kind of used that same chart and identified low risk buy, low risk sells off from pullbacks on the 15-minute chart. And kind of highlighted the relationship of ranges, price ranges with other ranges, ranges within ranges, if that makes sense. Discount the premium, and dealing with inefficiencies, repricing. Today, just going to kind of review. Today's Monday. Review price action for today. Globex opening was at 6 o'clock, so we already open for the next day, which is Tuesday. But we're gonna just talk about this week. So far, it gapped up. Price gapped up. After trading into this bullish fair value gap, it dipped inside of this volume imbalance. So again, this is a weekly chart. So I'm highlighting where price ran highs and highlighting where price ran lows and these inefficiencies. So this would be a fair value gap here, and from here, from here to here would be a volume imbalance, but I grouped them both together. Right, so I have this run on stops here, and we close with a bull bar. Like the bar close closer to, we discussed this before as well. So it closed about 20% of its range, between 20 and 30%. So it's highly likely that the next bar would be bullish. And we gapped up near the high of previous week, slightly below. All right, so from here, let me just highlight this and make sure that everything shows on the lower chart. Let me go to the 4-hour from here. That's this high here. All right, so that's yesterday. This is today. So where's price going? You can see here what caused, you can do this anywhere, but support and resistance. You can use swing highs. You can use if price touch level multiple times, 3 to 5. But this is a balanced price range. You have a bull bar followed by a bear bar. It overlaps. So that's what I'm going to highlight. You can highlight here to here and pull that out. All right, so we have that. It was used here, send price lower, used here to send price lower, and it's used here to potentially send price lower. So there's a tiny fair value gap in here. So we want to see what price does with that as well on this 0600 hour candle. And you think discount the premium of this gap up, then perhaps price would trade back into here. And you want to look and see if price holds above either this level, this weekly level, previous weekly high, or anywhere inside of this volume imbalance. And then if it breaks below here, obviously fill the void. Then you can go discount the premium here, look for some stuff. You have an inverted bullish fair value gap here. So you want to see after that what price does with this level. Anyway, let's look and see if we see a setup for today, and then I'm gonna get up out of here because I have stuff to do. And that's only the 30 EMA and the 9 EMA. Doesn't have to be on the chart. Doesn't have to be the 30. You can use the 20. You can use the 20 by itself. This blue one is the 9. It's the light one. It's... All right, so we're already established. I'm gonna take this off because this ICT kill zones and pivots kind of highlights what's the previous week's high. That's this black line. So you can see price during the Asia session gapped up above, gapped up into the concentrated encroachment of this volume imbalance, weekly volume imbalance, and then pull back into the previous week's high. And if you look at it, it's also discount to premium. Discount premium, that's using this low to this high, and we have a retracement. And let's change that to, all right, so we have an optimal trade entry 61.8 if you want to make sure you get in, or 70.6 if you want a steep discount. My tendency is to take not use the long wick and just use the highest body, so that fine tunes it a little bit and gives us a much lower risk profile and potential higher risk to reward. All right, and so that's the setup on the Asia session. And price essentially traded to, I guess that's above 3.5. 3.5. That's 3.5 standard deviations, and then pull back. All right, so that's the 15-minute chart. This is what happened. Let's take this off. We can see that you can use the 9 EMA for trend. I know S&B, you can use the 5 EMA for momentum. So let's see what that looks like. Momentum, to gauge momentum. So the moment it breaks below the 5, then you can say the momentum is slowing up. The 9 is good enough for me. But let's take them off. That's not essential. Price action is king. So we want to see, all right, price ran up during the Asia session, traded above the previous week's high. And then this is why I also highlight the Asia low, Asia high, and the midpoint, which is here. You probably can't see it, it's really light. And you can see price is consolidating above the Asia high. You want to call it the after hours, and this is the pre-market. It's up to you. Or you can say the pre-market consolidated. We have this here as well. Oh, I gotta go like just now. So we can use this here to say price ran this low, and price ran, so it ran a high, ran a low, ran a high. So high, low, higher, high, and then the retracement. That's how I see it. High, low, higher, high, retracement for the lowest buy. Let's make that lighter, like a yellow. All right, so yeah, so we have a consolidation. However, you have liquidity taken high, low, higher, high. This is also relative equal highs as well. So high, high, low, higher, high, retracement, and we retrace into this violated bearish fair value gap, inverted fair value gap, and you can use that to enter. So it's a volume imbalance, small volume imbalance plus the inverted fair value gap. I group them together. Let's take the midway point of this off so we can see better. And let's just paint that red as it should have been. And this is your 930 candle. So continuation, pull back into the range. That's another fair value gap here. And it should hold. It didn't even trade down to the midway point. Paint that green. All right. Take this off for now. And let me just, can I just, this was like the step 1. This was step 2. And this was step 3. And then this. So ran a high, ran a low, ran a high, and then the retracement. So this would be step 4 for the entry. This step 2 would actually be where you place a stop loss. And yeah. So this would be the first, technically this would be the first target. This would be second target, or you can make this first target, and this higher time frame PD array as the ultimate draw on liquidity. And here you can do your optimum trade entry. And that's why, let's put this, let's put all the, let's make that a little bit bigger. Yeah, make it this, nah. All right, so you see here, protect the stop here. This is your first profit. It's here. All right, so you got optimum trade entry, long. We have a pullback. Target is the high time frame. This is a 4 hour balance price range, as we discussed. If you don't like the green on the bullish, you can do the bearish candle. The same to me. As long as you're consistent. Right? So we have inside of here would be your target. And that would be that. And just push higher. And that high should have reached 10 to 12 is the London close. According to ICT, is the London close. 10 to 12, and the high or low of the day should be established probabilistic wise, not a guarantee. And that's what we have. Entry long. The latest for this entry was at 8:45 prior to the market opening. And then we have a continuation pattern above we need that. Continuation pattern above here. Now this is the 15-minute chart. If you don't feel comfortable capturing this, then you probably want to drop down to a 5-minute chart, as the optimum trade entry is taught on ICT's channel. And it's not like you are inventing the wheel here. So a lot of people teach pullback trades. I just started out with ICT, so this is my comfort zone. There's that. So you still have somewhat of an entry here as well, or here. Still not like we didn't see this pushing higher. 2 standard deviations is the target. Same high, same low to high, same retracement here. And You have a violated bearish fair value gap here, so that gets us 905. This is still the 940, 935. All right, so another thing you can do besides that is what happened prior to 830. And you can say took out the low, took out the high, and then 830 was the retracement. So this gives more conviction for price going higher. So we have the pullback into here. And this is what we kind of went through was where is price coming from? Where is it going? And this part is how will it get there? And the how will it get there part is where people mess up, where you kind of lose faith in the setup and you jump out of the trade or get in too early or too soon. And this is why I introduced like a moving average or something, just to kind of have like a visual aid for yourself. So yeah, can't even see that. I don't like but anyway, it's easy to see with that on, with this electronic trading hours background, just kind of see what was the entire New York session clearly. And that's the dominant trade, and the pullback here is the PM session. And you say what did it target? So you say 11 to 1 in general is the lunch hour. So that pretty much came back into discount here, and you have a bullish fair value gap right inside of here. That's where price is currently trading at. So you want to see what is price going to do? All right, thanks for listening. Salute. And remember to do less better. Try not to do so much. Try not to do as much unnecessary actions as it relates to trading or your trading model. And that's all I got.